Okay, let's have some fun and allocate some capital. Now, before I begin in the actual problem, I just want to note two things. One, I will go at a moderate pace, so if I go too fast, please feel free to pause and rewind as needed. And the second thing is that if you are watching this on YouTube, please refer to the description below the video, and in that text you will find a link to the actual blog post that corresponds with this problem. And in that blog post, you can actually download a blank version of this spreadsheet so you can follow right along and type everything in as we go. So I encourage you to do that because that's how we learn. Let's just step back for a minute and think about the overall problem. Remember, we have an investment firm, a real estate investment firm called Trumped Up Development that has the opportunity to invest in any of three real estate projects: an office building, a hotel, or a shopping center. Now, they do not have to invest in all three. They can if they would like. They could invest in two or one or whatever. There's no requirements, so they can allocate their investment however they like. Now, our goal in this project is to help them allocate their capital as to maximize their total net present value. Now, a few things to keep in mind. One is that the firm does not have unlimited capital available. They have a certain amount of capital available now. They have a certain amount of capital they project to have available a year from now, and then a year after that, and a year after that. So their investment is a cumulative investment. They're going to inject capital into the investment a little bit over time. Now, of course, each year they cannot exceed what they have available. So that's going to be a constraint in our problem. Now, the next thing to take note of is that each project has a certain schedule as to how the capital can be allocated or needs to be allocated. So the office building might say 40% has to be put in the first year, and then 10% the next year, and then 20% the next year, and so forth. For the hotel, it might be a little bit different. Maybe 20% now, 30% the second year, and so forth. But you get my drift. Each project has a different capital structure over time as to how much the investor will have to put in over the 3-4 year period. So in the end, what we're going to try to find out is what percentage of each investment should the investment firm commit to. Should they invest in 5% of the office building and 3% of the hotel and 12% of the shopping center? Will that be the best way to allocate their capital? We don't know. That's what we're going to try to find out. Over on the bottom right-hand side, you'll see total NPV, which is total net present value, and the higher that is, the better. So we're going to have Excel run the numbers, and then it will give us the best capital allocation as to maximize that total net present value. So let's look at how the spreadsheet is set up. At the very top, you'll see a row of three sort of salmon color cells, and that is the net present value of each project. On the right-hand side, you will see cumulative capital available in the medium blue color. And again, that is how much capital the investment firm has starting now and then jumping into the future. So they're going to invest a little bit now, a little bit a year from now, a little bit a year after that, and a little bit a year after that. That column will add up as it goes. Now, to the left of that, you will see cumulative capital spent. And that is going to be a running total of how much capital the firm is actually putting in according to our solution. So if you notice, there's a less than or equal to sign between the two. And that just says, obviously, that the cumulative capital spent cannot exceed the cumulative capital they have available. So in the first year, if they have $20 million available, the cumulative capital spent to the left of that cannot be greater than $20 million. Now, to the left of that, you will see cumulative capital required, and basically that is schedule of how the investment has to be infused with capital over time. So, for example, the office building, it might require 20% of the total project now, 25% a year from now, 30% the year after that, and so forth. The hotel might be different. The hotel might need 50% now, 10% a year from now, 20% a year after that, and so forth. So those columns under each project is just sort of the schedule on how capital has to be infused into that project. Okay, and down at the bottom in the center, you'll see a light blue color, and that is the participation share. And all that's going to be, and this is what Excel is going to figure out for us, is the percentage of each project the firm should invest in order to maximize their total net present value on the lower right. So we're going to put in the information into our cells, and then Excel is going to manipulate numbers in the background for us to tell us exactly how much the firm should invest in each project as a percentage in order to maximize their total net present value. So let's go ahead and begin by naming a few cell regions. Again, I use the define name feature in Excel to assign names to cell regions that are more intuitive. We can then use those names in formulas and in the solver and other things. So we're going to go ahead and name a few cell regions here. So go ahead and follow along if you're using the spreadsheet with me. Okay, the first thing we're going to name is the medium blue on the right under Cumulative Capital Available. So we'll select those 4 blue cells. We will right click, go down to the very bottom where it says Define Name, select Define Name. And I have a standard naming convention for these using uppercase letters. So Capital Available. Capital Available. Scope I'm going to leave to Workbook because I'm only using this name on one sheet. If you were using it on multiple sheets, you would want to assign the scope to certain sheets, but I'm going to leave it on Workbook. Click OK. Next what we're going to do is Capital Required, and that is our large brownish block in the middle. So we'll select that, right click, go down to Define Name, and we'll call this Capital Required. Leave the scope to Workbook, click OK. Next one will be the purple cells. We'll highlight those, right click, go down to Define Name. This is Capital Spent. A few more. At the very bottom, the light blue color, highlight those 3 cells, right click, Define Name, and we will name those Participation Share. Click OK. Our next set is at the very top, the 3 salmon colored cells at the top of the spreadsheet. So we'll right click, go down to Define Name, and those will be Net Present Value. I'll just delete the underscores. Okay, so Net Present Value for those. Click OK. And one more is the total NPV. So we'll highlight that pink cell, right click, Define Name. This will be Total NPV. All right. So we've named our cell regions. Now we need to put in a few formulas. Luckily we can do some autofill, which means we only have to do 2 actually. Okay, so we're going to go to the top cell of the Cumulative Capital Spent column, which is the purplish column. And we're going to put in a formula there that begins with equals sum product. In another video I explained how this works, but basically sum product will take an array of cells, multiply that by a corresponding array of cells, and then add all that together. Once we do the formula, you'll kind of get the idea how it works. So we'll select sum product, and we want C9 to E9. So we want just those three cells to the left, C9 to E9, comma. If we multiply that row by what? What will give us the cumulative capital spent? It will depend on how much we've invested in each building. So we're going to be multiplying those three cells by the participation share at the very bottom. So we're going to start typing participation share. Oops. And Excel guesses we want that. So we will click that. Close parentheses. Let's talk about what that's going to do real fast. That formula will take the top row of cumulative capital required. It will multiply it by participation share, add it together, and that will give us cumulative capital spent. So more specifically, it will take this cell times this cell plus this cell times this cell plus this cell times this cell. That will give us the cumulative capital spent for the now row. Now the cool thing is, to fill in the rest of that column, we can just drag down. And if we go into each one, we'll see that the only thing that changes is the C10 to E10, C11 to E11, and C12 to E12. The participation share array stays the same. So that's very handy. Now they're going to be zeros for now because we haven't entered any numbers into this yet. So, but we will do that here in a second. Okay, and the last formula we got to do is the total NPV cell. And that's going to be equal sum product. What two rows of cells should we multiply together and then add to give us our total NPV? We're going to have the net present value of the projects, because that's what we're investing in. So net present value, which remember is the top row, the salmon color row. We're going to multiply that by how much we're investing in each, which is participation share. And that will give us our total net present value for the spreadsheet. So in total NPV, we're just taking this row of cells multiplied by that row of cells and then adding it all together to get our total NPV. Okay, so let's go ahead and enter some data into our spreadsheet, and we'll use the solver add-in to find the solution. So our first bit of data we're going to type in is the net present value of each project. Now remember, as long as these are positive, that's what we want, and the developers have already figured that out, so we're just going to go ahead and type it in. For the office building, it's $45 million, so 45. The hotel was 70. And the shopping center is 50. Okay, so that's the net present value of each investment. All right, the next set of data we'll type in is the cumulative capital available in the firm. The firm now has $25 million available. Now, at the end of the year, 1 year from now, they can put in 20 more. So the new total is 45. The next year, they can put in 20 million more. So the new total is 65. And at the end of year 3, they're able to put in 15 million more. So the total is $80 million. So as the project goes along, they have a certain amount of capital available, but in the end, it's not going to exceed $80 million. Now, next set of data we'll type in is the cumulative capital required. And again, that's sort of the amount of capital of each project that is required as the project develops. For the office building, right now it requires $40 million. And then at the end of year one, it requires $60 million more for a new total of $100 million. And then $90 million more, so $190. And then $10 million more, so $200. Okay, and then for the hotel, it is $80, $160, $240, and $310. For the shopping center, we have $90, $140, $160, and $220. All right. Now, if you just sort of look at the cumulative capital required by each project, it's quite different. For example, the office building requires $40 million out of $200 million total this year. The shopping center requires $90 million now out of $220 million total. So it has more upfront capital requirements than the office building. So part of what makes these type of problems complex is this very thing. It's the fact that each one of these projects or each one of these investments has different capital inflow requirements. And that's where Excel is going to do the heavy lifting for us. So we have entered all the data available to us. So we are going to go in and use the solver to have Excel determine for us what percentage, if any, of each investment should the firm invest in order to maximize the total net present value. So we're going to go into the solver. Let's make sure you have the solver add-in installed. In 2010, it's through the File menu. Go down to Options. And then Add-ins. At the bottom, you'll see Manage Excel Add-ins. Go ahead and click Go. And at the very bottom of your list, your list won't be this long because I have some statistical macros in here. But you should see the solver adding. Make sure it's checked and click OK. And we are ready to solve this. Okay, so let's go ahead and use the solver to have Excel find our solution. So we'll click Solver. All right, and everything is in here from the last time I did it. But I'm going to go ahead and just sort of show you what everything means and how it's set up. So set objective. That is what we're trying to either maximize, minimize, or set to a specific value. Now remember, in this case, we're trying to maximize our total net present value. So set objective is total NPV, because we named it that, and we can use the names. By changing variable cells, this is what the solver in Excel is actually going to find for us. So in this case, we need to know what percentage, if any, of each project should we commit to. So Excel is going to find that for us. So when it says by changing variable cells, it's basically the same way of saying, okay, Excel, find this. So we're going to have it find the participation share. All right. In the subject to constraints, remember we do have a constraint in this project, in this problem, and that is the fact that the firm does not have infinite capital available, and it doesn't have the capital it does have all at once. It has $25 million now. The next year it will have $20 million more. The next year it will have $20 million more. Then the final year it will have $15 million more. So as we go, we cannot exceed the capital the firm has available. We got to tell Excel not to exceed that. So we do have a constraint. So we'll click Add. And I'll go over here. And then it's set up exactly how the columns are set up. So capital spent must be less than or equal to cumulative capital available. So this is capital available. Click OK. Now we also want to make sure we have a couple of settings at the bottom set correctly. Make sure the checkbox is filled for make unconstrained variables non-negative. And for this project, all that means is that we cannot invest negative amounts of money into each project, because now our return could be negative if something happens and the whole thing blows up. However, our investment is not negative because we're not being paid. We are putting money into it. So make sure that's checked. And then select solving method. Make sure simplex LP is selected. That's just simplex linear programming. That's sort of the mathematical model the add-in is going to use. And if we have everything typed in correctly and our cells are correct and our naming is correct, when we press solve, it should give us the answer we have been so looking for. So let's go ahead and click solve. Great. Of course, the solver result says solver found a solution. All constraints have been satisfied, etc., etc. We're going to keep the solution so we can discuss it. So we're going to go ahead and click OK. All right, and let's see what Excel did for us. A couple of things. At the very bottom, where it says participation share, you'll notice that the solver has told us that we should not invest in the office building. We should invest in about 16.5% of the hotel. Now, that's not 16.5% of our capital. That's 16.5% of the hotel project. And then for the shopping center, we should invest about a little over 13.1% of the shopping center. And that is the optimal percentage to invest in each one that will maximize, if we go over, our total NPV of $18.11 million. Now, another thing to notice is the cumulative capital spent. In the now row, we used up all $25 million we had available. In the next year, we were almost able to use all of the next $20 million we had. So we could have invested $45 million at this point, but we were only able to optimally invest $44.76 million. Now, at the end of year 2, you can see that we could have invested $65 million, but the optimal investment strategy calls for only $60.58 million cumulative spent up to that point. So in the bottom, it tells us that in the end, we were able to invest all the capital we had available over the course of time. The investors wanted to invest everything they could that was available because they're convinced that these are very profitable real estate investments. So that actually in the end, they were able to do that. So if you notice, of course, all of our cumulative capital spent cells are either equal to or less than our capital available. And we have a percentage to invest in the hotel and shopping center with a total NPV of $18.11 million. And that is how we efficiently and effectively allocate capital using an Excel model.